All right, welcome everybody. We're about to begin. This is going to be a special presentation. I mean, we're all kind of special, I guess. And where we're going to start with Jody, who's got some tips she can let you know what's going on in the market. She's going to let you know how the guidelines have been changed. And as I said in my email to you guys, knowledge is power. Understanding this can save your clients thousands of dollars and help them buy a house that otherwise they may not be able to buy, and then you get paid too, so it's all good. So I'm going to turn it over to Jody, and she's in our spotlight now, and take it away.
Thank you. Hello, everyone. Thanks again for joining our call. I don't know, I can never know if you've been on one of my calls before or if you're brand new. So if you're brand new, welcome. The goal of this is to give you guys some kind of inside information so that you've got a little bit more knowledge than maybe the next guy when you're trying to go out there and get listings and work with buyers. And it's important for agents to understand a little bit of the mortgage side. Okay, you don't need to know everything. You don't need to know all the guidelines or anything like that. That's what I'm here for. But I like to give you guys kind of a high level view of what's going on in the market right now. And then what Golden 1 guidelines have changed. We've actually relaxed quite a bit since last year when every lender tightened up their guidelines because of COVID. So I'm going to go over a few of those updates that we have, and hopefully that will maybe remind you of someone that maybe couldn't buy a few months ago that now maybe they can, or if you're in your office talking with other agents or at an event and you overhear somebody that needs a certain, program, if what I have to offer is beneficial to them, then of course you will be able to have that connection. So I'll go ahead and start. Let me get my slideshow over here. Okay. So housing market update. Oh, sorry. Hold on. Oh, sorry. It's on the other screen. Sorry. Okay, this happened last time. All right. So I'm going to be looking over here reading this. So forgive me if I'm kind of all over the place.
Do you want to share that screen so people can see it too?
Can you? Oh, you can't see my screen, can you?
No, we can't.
I'm sorry.
You have to click on the green button. I never do this.
Okay, yes.
Except every meeting.
If you can share it, that'd be great.
No, you're, I think, set up to share. You just need to click on the green button that says share screen.
Oh, yeah.
At the bottom, it'll say share screen, and then just pick the screen. If you have two screens, it'll give you options.
Okay, I want
See the green button at the bottom?
Yep, I got it. I'm hitting it now. Okay, share.
There we go.
Okie dokie. Where's mine? Here we go.
Yeah. And then maybe make it big,
Yep.
like by hitting the button up on the top.
There we go. How's that?
It's a little small.
Oh, it is?
Yeah, that's why I was saying there's a button up at the top. Maybe make it bigger, but we'll see.
That's all right. I know how to fix it.
Hit escape.
I will go to this screen. This will be better. And I'll move my presentation here because the other screen I have is
a little tiny screen.
It's a like legal size.
Well, that's why we're
move that over here. Okay. There and
very good. Excellent.
All right, so hitting play and it's not playing. Well, that's okay. You guys can see it, right?
Yeah.
It doesn't have to be super fancy. Okay.
You also could try from current slide if you try that.
Oh.
But just see.
Yeah, it's what it's doing is it's splitting the screen and it's taking it over to my other screen.
This is wonderful.
How do I fix that?
Wonderful. This is wonderful.
All right. I unplugged that screen, so this should work here now. There we go. Okay.
Cool.
Housing market update. Jesus, I'm sorry, guys. Pull the wrong one. We want this one. Okay, there we go. Okay, here we are. Now we can start. Purchase applications. Okay. Mortgage Banker Association. So when I say MBA I caught myself from my other presentations just saying MBA, and I didn't let you guys know what that means. Mortgage Banker Association is who compiles data, and then they spill it out to us to kind of give us an idea of what's going on in our market. And most of the time it's kind of on the whole country, but we all know the Bay Area is a little bit different. We don't see decrease in value as much, right? We see it going up probably more than the average across the country. Our home prices obviously are way more than the average. So just take this information, not necessarily so much with the number that I'm giving you, but an overall idea of what's going on, okay? So we got our, Mortgage Banker application data last week showed that our purchase data or purchase applications jumped up about 7.5%, which is the highest since April. Now that puts us in August of that going up, which is interesting because, normally our busy season is spring to early fall, right? Everybody's trying to move, get their kids in school, that kind of thing. So it's nice to see that even in August, we're still seeing an uptick in applications. Now, year over year, they're down 12%, but we also have a rise in cash buyers. I'm sure all of you have seen that, which is really awesome for sellers, right? I mean, closed in 10, 15 days, really important, especially if they're buying another house. So, of course, you guys can still represent a cash buyer, so that's awesome. So we're pulling out the cash buyers, it's really down about 5%, okay? Inventory levels are still low. I know you listing agents out there like, but I think there's going to be about 1.5 million or so homes hit the market here coming up, based on what I read in the news. So obviously that's across the whole country, but I'm sure a big chunk of that will be in, California, Bay Area, hopefully. Refinances were down about 3%. That doesn't really affect you guys, but it does give you an idea of people that are saying, I think I'll stay in my home for a little while, at least a couple of years. We went down from 67% to 65% of the total volume. Interest rates still about the same right now as they were last year. Now, to speak briefly on interest rates, because I get this question quite a lot. Are rates going to go up? Are rates going to go up? Rates going to go up? I mean, if you would have asked me this last year at this same time, I would have said probably middle to end of next year, we'll see an increase in interest rates. That's kind of where the trend was going then. But look, we are just about the same. We're only about 4 basis points higher than we were this time last year. And that's incredibly minimal, not even really almost not even worth mentioning. So I don't know exactly when rates will go up. There is talk of it. I think when we've got another wave of, the variant with coronavirus, that has a huge impact on the market. So until that gets under control, I think we're probably going to be about where we are right now. When the economy starts to recover, then that's when the Fed's going to say, maybe we should increase rates. And if they do that, prime will go up. Prime right now is 3.25. I don't think that prime has moved in the last year. I can double check that, but I don't think it's changed at all. So if prime goes up, then of course that's going to result in a trickle down effect of mortgage rates going up. But I don't think that they're going to go up drastically. Right now we're 2.75, maybe 3 1/8, depending on credit score, loan type, that kind of thing, down payment. If you ask me, my best guess, I would say maybe we'll see 3.5 or so, something like that. I don't think it's going to be anything shocking. Obviously, the housing market is a huge, important piece of our economy here in the country. And the housing market is not thriving, then that's a really bad sign. And that affects a lot of things. So I don't think that if rates do go up, I don't think they're going to go up drastically. So don't panic thinking, it could be any moment now. I don't think it's going to be like that. So, but I'll continue to share with you guys my opinions about it. Of course, I'm not the Fed, so I don't have the final say, but I kind of can see where the trend is going. Okay. Purchase demand remains very strong, and there would be more purchase if there's more inventory, right? Yes, you guys know that. Listing agents again. Okay, so we're depending on you guys to work your magic and try to get some of these listings out and available for buyers, because we know we've got a ton of buyers. I know I've pre-qualified so many people, and I've got people that I've been working with for 6 months, 7 months. update the approval letter from time to time, they don't get the bid, right? So, I know that you guys are working on that. I believe Mike had a call, I think it was yesterday or maybe this past week, about overcoming objections to listing, to getting a listing. And that's super important. So make sure that you're on those calls. Okay, so here is what the next couple of slides, I'm going to talk about our guideline updates. Some of this is Fannie Mae, which is going to affect every lender out there. Golden One underwrites to Fannie Mae guidelines. We have very little, if any, overlays. What an overlay is when a lender takes a guideline from Fannie Mae or any investor, but let's talk Fannie Mae, it's the biggest one. And then we add a stricter guideline to it. Okay, so if Fannie Mae says, we'll do a loan at 620 credit score, or we'll buy a loan at a 620 credit score. Golden One might say that's fine, but we are going to move that to 640. So we don't really do that very much. As a matter of fact, if there are any overlays, I'll double check. But some lenders do, some don't. So for Fannie Mae, it's important to know when their guidelines relax, because then that affects us. It is effective. You'll see some of these effective dates. Some of this is a few weeks old, but maybe not quite impact you guys yet. But it should in the future. And again, always keep in mind the people that maybe you tried to help and they couldn't qualify. See if any of the stuff I'm going to tell you today might trigger a memory, okay, of someone who didn't. Even if it's last year, the year before, always, go back and call them and say, hey, maybe now. Okay, so Fannie Mae went back to the original guidelines that do not require account liquidation in certain instances, and not to limit reserves of 70% of balance of stocks, bonds, mutual funds for conforming high balance. What that means is they're not requiring for liquidation. This is all for reserves, okay, or maybe even cash to close, but mostly reserves. They're not requiring that any of the funds be liquid, okay? So what we usually do is take 70% of the 401k balance, for example, and that's what we can use as reserves. So Fannie Mae relaxed that. Again, this is also only for conforming high balance loans. Okay, so if it goes over 822,375, 822,375, that's considered jumbo, and that's not Fannie Mae. Okay, so they've got a relaxation on reserves. With COVID, they wanted all of the documentation to be within 60 days of the application date. Of the close date. So that was causing lenders to have to ask for more pay stubs, more W-2s. Pay stubs, more asset statements. And of course, people get annoyed because they're like, oh, you keep asking for this. And like, yeah, well, it's we have to make sure that you're still stable through this whole process, right? And that's what Fannie Mae was looking for, to show that you're still stable. You haven't had any decrease in income from the time you apply to the time you close. Now they've gone back to 120 days. So we'll be asking for a lot less documentation. I'm super pumped about that. Golden One, we have some temporary flexibilities to our appraisal, inspection, and reporting requirement on our own loans. Now, not all loans qualify. So, if it's jumbo, then this is not jumbo. We still need a full appraisal interior. But there are some loans that we are allowing for drive-by appraisals. Okay, even if we would normally ask for a full appraisal interior, we'll just do a drive-by. So if you've got anybody you want to run that by me, I can take a look at my guides and give you an idea of if that's something that there's a potential. It's not anything I can ever guarantee. Basically, run it through underwriting. If we get desktop approval with a property waiver inspection, property inspection waiver, then we're good to go. And then if we don't get one and then it still qualifies, maybe we'll allow that. For payments missed during the time of COVID. Okay, so we know that we're working with buyers and sellers. They own a home. Perhaps they took advantage of the deferment that lenders were offering for COVID. And I know several people that in our industry that took advantage of that. And it was, I think, maybe 12 or 13 months that one of my friends said that he had gone ahead and then just paid the balance right back. But lenders are allowing, for the most part, you got to call and make sure, but they're allowing for people to take that all that missed amount. Let's say it's $50,000, and either pay it all at once, prorate it, and then your actual mortgage payment will increase until the arrears have been paid, or they're tacking it on as a balloon note at the end of or behind your first mortgage. Okay, so your first mortgage, maybe your balance is $800,000, and you took $50,000 in arrears. They'll take the $50,000, put it on the back end of the loan, and it'll be due in full if you refinance or sell. There should be no added interest collected on that portion. Okay, so that's why it's separated out, and they don't just say, well, we'll just increase your loan amount, because then you would be paying more interest, right? But we're not going to consider any missed payments during COVID-related forbearance that have been resolved where is it? Been resolved to be historical delinquencies for purpose of our excessive mortgage delinquency policy. That we're going to reference back to some Fannie Mae guidelines on that. So if you have someone that says, I want to buy a new house, selling mine, but I didn't pay that mortgage for 6 months or 11 months or however long, that's okay. Give me a call. Let me take a look at their credit. Now, if they had previous delinquencies not related to COVID, then that's not going to apply. But for the most part, it's going to be COVID-related missed payments, and so we'll still take a look at that. Okay. Sorry, I went too fast. Okay. So we have Golden One will allow a 55% debt to income ratio, DTI, on certain loans. If the borrower has a departing residence, maybe they don't want to sell their home, they want to keep it, rent it out, then that's fine. We'll go up to actually a 55% debt to income ratio. That's huge. As long as they have the property pending sale, if even though the property won't close before our transaction closes, the new purchase will still allow the 55. Has to be primary residence, and the principal, interest, tax, and insurance payment on that departing residence will be included in their debt to income ratio. But that's why we go up to a 55. Okay, so if you've got somebody in mind that maybe they're real tight on their ratios, and this is for jumbo. Okay, this is for over 822, 375. All right, so $1.5 million loan amount will still go to 55, pending some of these things the borrower can meet. We just need an executed sales contract for the current home, the departing residence, and make sure that all of the financing contingencies for the departing residence has been cleared by their new buyer. All right. Debt to income ratio, 55%. Here's the other little caveats to it. You need a 720 or higher FICO. And the selling or the departing residence should be around 80% or less loan to value. So they do have to have some equity in there. Departing residents obviously be listed, documented with a fully executed listing agreement, and we will document an additional 6 months of principal, interest, tax, and insurance payment on that property. So if their mortgage payment is $5,000 a month, and 5 times 6, and that's what we'll ask for reserves for that property. Because we all know there are times when deals fall through, right? I'm sure you guys have had that happen. And we want to make sure that if we do go up to a 55% ratio for this borrower, that they do have enough money set aside in reserves to still make their housing payment. 6 months is all we're asking for. Maybe they put the house back on the market, get a new buyer, and they're able to close. So if their goal is to sell, then typically, within 6 months, you probably go ahead and have it sold. All right, this is something that I really like. I don't know many other lenders that do it actually, but if you know someone, let me know. Golden One will allow for a borrower on a new purchase to utilize a home equity line of credit on their departing residence to use as down payment. So, and this is fine, even if they're renting the departing residence out, that's okay. It's going to be looked at as investment property. Okay, so the rate will be a little bit higher. It's going to be prime plus. There's going to be a margin about 2.25 maybe, depending on loan amount, credit score, loan to value, that kind of thing will kind of go into play around with the margin a little bit. What I'm seeing is average around 6% or so. So it's a little bit higher of a rate, of course, but if they don't have liquid cash, it's just sitting in equity in their home that they want to rent out, then we'll do that and we price it as investment property. It is a interest-only payment, so it's cash flow wise, it's still pretty attractive. It's a draw period of 10 years, so they can utilize that home equity for 10 years, pay it down, draw back off, pay it down, draw back off. It's similar to if you've been in the industry longer than 10 years or so, maybe 7, 8 years, you've probably heard of bridge loans. This is similar to that. It's not a bridge loan, okay, because bridge loans would then have to be paid back within a certain amount of time. This is not that. This is still a 30-year loan if they end up staying or keeping that home for 30 years. Our maximum loan amount on that is $500,000. So, I think it's amazing because it also enables buyers to maybe retain the departing residents, keep building equity, rent it out, have some rental income, maybe that pays the mortgage, right? And they're building more wealth that way. So I like this a lot. If you guys have anybody that says, well, I've got equity in my house, I don't really want to sell it, but I really want to, I want to rent it out, but I want to buy this other house, don't have the cash. Let's take a look at it. Let's see if it's something that we can make work, okay? 3 to 4 weeks or so on the underwriting and funding of that. And we can do it concurrently, okay? If they want to go ahead and put in an application for a purchase and all that kind of stuff. So that's a huge plus. I love it. I think it's great. I think it will empower a lot of clients to be able to start building more wealth in their home. And if you've got anybody, tell them to give me a call. I'm not going to go over this part right now because I've done this previously with you guys, but it will be in the slide. Strategies to overcome limited assets, of course, the HELOC, okay, if that's something they qualify for. Retirement funds, hopefully they got some more in retirement, now their market's up. And then our 80-10-10, I've talked about that, I think, on every single call. It's a fantastic program. Keep that in the back of your mind. I do get a lot of you guys calling me, asking me if we still have it. Yes, we do. I don't see it going anywhere anytime soon. If it does, you'll be the first to know. But anyway, it's a great program. So at this point, what I'd like to do is turn this call over to Jeff Sipes with Blue Water Credit. The reason I want you guys to hear from him is because I'm getting more and more phone calls from borrowers who have some challenged info on their credit report, and it's not anything that I as the lender can do anything about. I can't rapid rescore them. We can't overlook certain delinquencies. So what I think is important is to find somebody, a company, and you can think of it as credit repair, but it's not the kind of credit repair random stuff you find on the internet that's just messy and maybe not quite ethical and things like that. This is not that. These guys are local. They're out of Roseville. I've worked with them before with other clients, and they do amazing work. And it was really quick. I think it didn't take more than 60 days or so for that particular client to see a dramatic increase in FICO, which then enabled them to be able to buy a house. You're going to want to keep, Jeff, all of the contact information in your back pocket, because most likely if you're doing any kind of volume, you're going to run into people that have a challenge. Let's go ahead, address it now. That way when I pull credit, we know. All right, it's already gone, already taken care of, and we don't even have to worry about it during the transaction. So with that, Jeff, if you'd like to take over, Mike, if you want to.
Yeah, let me just say something. My group at eXp Realty, which is all from the Roseville, Sacramento area, referred Jeff to me even before Jody mentioned it, and they've worked a lot with him, and everybody's happy that I've heard from. So I'm just throwing that out. And by the way, I need to hear this. I have a buyer who's bankrupt, unemployed, and a convicted arsonist. So I'll send them to you. And maybe.
Oh, I got a buddy at Wells. They can do that.
I love it. That's awesome. Thank you, Jody, and thank you, Mike, very much. I'm going to try to get my screen share on. I'm excited to share with you guys. Let's see if I can share my screen with you. All right. Can you guys see my full screen here?
Absolutely.
All right, so this is a picture of our team. We're located here in Roseville, but we can assist anyone in California. We do work in some other states too. We have a canine intern. He's doing okay, you know. Sometimes he gets a little feisty and growls, but other than that, he's doing great. Let's see if I can get my PowerPoint to work now.
You might have to click on it in order to...
All right, there we go. So this is a picture of my wife, Natalie, and I. We actually have 3 children, believe it or not. I can't believe it. We met 20 years ago on a cruise ship. That's a whole other story I don't have time for. We have a 13-year-old, so if anybody has any teenagers, you know we're going through some fun. And then an 11-year-old in 6th grade, and then our daughter Addison started kindergarten just this year. So very grateful for that. Blue Water Credit's been around for 13 years, and over the past 13 years, we've actually helped over 10,000 people repair their credit. So we've literally seen everything you can imagine when it comes to credit. I was on the news a couple years ago because Paul Curtis phoned us and said, "Hey, I need to interview you." Every time this lady goes to apply for a loan, the lender pulls her credit and shows she's deceased when she's not dead. So we've literally seen everything you can imagine when it comes to credit. Our 2 main services that we offer is credit repair. That's where you work on removing negative items from a credit report. Information that's negative, like a collection or late payment, legally can be removed from a credit report if it's inaccurate, if it's incomplete, meaning they haven't filled out all the proper information, or if they can't verify the information you're requesting. So over the years, we've gotten hundreds of ways that we can send demands in and find the legal loophole on how to get something removed. We also have a debt negotiator on staff. She's been negotiating debt for over 10 years. We just negotiated a second mortgage that was delinquent this week. It was a $180,000 second mortgage. We were able to have them settle for $40,000. So credit repair is a service, and then also debt negotiation is a service we can help with. So Jody, maybe if I could put you on the spot. As you guys probably know, your credit score is going to have a big factor into interest rates that you or your clients pay. So is there like a credit score that you guys are looking for to really help with interest rates? Is it 680 or 720 or 740? Where do you see the biggest price improvements on credit score, Jody? Oh, you're muted, sorry.
Okay. So where your interest rate is it's important no matter what. You're going to see impacts every 19 points. So 620 to a 639 is going to be different than a 640. Okay, so it goes in increments of 19. The biggest impact is going to be on adjustable rate mortgages because those are riskier. So there's quite a bit of an adjustment if you've got a lower score. But we also have a minimum score for ARMs, typically 700. But that's something I can kind of go on. I could talk about that for roughly 4 hours, but yeah, it is going to impact your credit or the interest rate, maybe by a quarter, an eighth, something like that. I have one right now, and this is one of the reasons I thought about bringing Jeff on. She's got a medical collection, $200. Didn't know about it. We are fine. We're not going to ask you why you have a medical collection, but it impacted her interest rate to the tune of $800 a year more she's paying for a $200 collection. That stinks. So that's why I was like, oh, we got to get this stuff addressed ahead of time. So it does have an impact. Depends on the loan amount to know about how much.
Thanks, Jody. Yeah. So some of the best clients for credit repair, it's funny you say medical collections. We actually have a system with TransUnion Credit Bureau where we can go in if it's under $500, Jody, we can get it deleted instantly. So that's something literally within an hour or so you can re-pull credit and get it back with a high score.
That's amazing. That's awesome. Thank you.
One of the there's probably maybe 10 or 15 credit card companies national that have this ability, and so we're grateful that we have that. So people that can benefit from credit repair is if mainly if they have collections, that's something we can help with. Medical collections, if they've had identity theft, late payments, if they need debt negotiation, or if they need a credit attorney, we have a credit attorney on staff too. Some updates. So I've just for you guys' time frame, I've got about 25 worth minutes to go, and I have about 45 minutes of information. So I'm gonna talk fast. Hopefully you guys take notes. And in the chat, I did put my contact information, which is my name, my email address, a phone number to our office, and then there's the number that you can text into. It's the 916-292-7962. And if you text BWC, you'll get a copy of this presentation with some other tools that we have as well. So you can get a copy of this presentation. All my information is in the chat. So 2021 update. So one big update is everyone has access to a free credit report once a week now. Prior to the pandemic, we only had access to this credit report once a year. And so you can get a free credit report once a week now through annualcreditreport.com. The cool thing about this report is it does show the month and the year delinquencies fall off the credit report. No other credit report has this, so this is a really cool feature of this report. Now, one thing that you guys have to be aware of in your clients is this credit report is not going to give them a credit score, but it's going to give them all the information reporting to all three credit bureaus. Another big change is federal school loan update. Forbearance ends February 28th of 2022. Federal school loans were put into forbearance from the CARES Act, which was March of 2020. So federal school loans, there's no payments made right now. It was supposed to sunset or expire at the end of this month. However, they did push it out until February 2022. So no interest is accrued, and if somebody has a federal school loan into collections, they've stopped the collection activity. There is a program called rehabilitation. We can help set this up for the client. It's done on federal school loans and collections, and it's a 10-month program. When they go through this program after 10 months, it actually removes the collection status on the school loans, and it gives them brand new loans. So that's a great program for somebody that has a federal school loan that went into collections. All right. One of the big misses, if I may, is people think that the credit scores they're looking at online are accurate. And so you guys probably would can relate if I say Credit Karma is Zillow's estimate of credit scores. Unfortunately, majority of consumers have Credit Karma now because it's free. But I've seen the score be high, I've seen it be low, I've seen it be accurate. So it's not going to be accurate. So if your Credit Karma score is a 750, your mortgage lender is going to pull credit, Jody's going to pull credit. And that score is not going to match about 99% of the time. The biggest difference is because the type of credit score Jody pulls is called a FICO score. FICO stands for Fair Isaac Corporation. There's two guys that started FICO in 1956 down in San Ramon, California. It was Bill Fair and Earl Isaac, so Fair Isaac. They've shortened it down to FICO. Now FICO is the only credit score used for home loans. Now Credit Karma uses what's called a Vantage credit score. And so if anybody of your clients have credit monitoring, they're probably looking at a Vantage credit score, which there are quite a few differences. Obviously, the formula they use is different. The Vantage score ignores paid collections. And then there's also some requirements on how long you have to have credit before you can have a score generated. Scores can vary. Jody, I don't know if you want to comment on this, but I personally have seen Credit Karma score be over 100 points off from a mortgage credit score. When you talk to people, Jody, and they're like, I just checked my credit score, it's this. Have you seen them be way off on your numbers too?
Definitely, and I always reference back to when I first met you years ago about the different scoring models that are used. Credit Karma, all those companies like that. FreeCreditReport.com or something. Anyway, that stuff is all more educational. It's kind of like a starting point for someone to gauge about where they stand. But there are different models that will give a different score for credit. Auto loan, credit cards, for example, that's all. You're going to pull a different score for all of those. So, do have to have that conversation quite a bit.
Yep. Thanks, Jody. Yeah, so as you can see in my slide here, there's the Vantage credit score, which is Credit Karma, and then FICO, they have about 50 different versions of their score. And so even if someone says, I know my FICO score, it's probably a different version than what Jody's going to pull for a pre-qualification. So as you can see on this chart, the point variances are definitely different. So I've seen this in my own life as well, where if I look at my credit card FICO score, I've seen that be 50 or 60 points higher than my mortgage FICO score. So I hate to say it, just in general, usually the mortgage credit score tends to be on the lower side from what I see, but that's just an observation of mine. So there's two ways to get a mortgage FICO score. So the easiest way is have your lender pull it. So Jody can pull your client's credit, and obviously she's going to share credit scores with them. If your client wants to get their credit scores before they talk to a lender, there's only one website to get that. It's myfico.com. It is a soft inquiry, so it will not impact your score in any way, but there is a cost involved. So it's $30 if they sign up for their monitoring, or one-time fee is $60 to get their mortgage FICO scores. So your lender or my FICO are the only ways to know what an accurate mortgage credit score is. The credit score, just not to bore you guys, but to give you some background, it really represents the level of risk the bank has with lending money out. And so FICO is trying to predict the likelihood of the loan defaulting over the next 2 years. So if somebody has a 680 credit score, FICO's saying about 1 out of 20 will not pay the loan back. And you can see down at like a 620 credit score, FICO's saying about 1 out of 4 people are not going to pay the loan back. So that's why interest rates are higher. Or there's mortgage insurance or larger down payment. The bank's basically trying to cover the higher risk when somebody has a lower credit score. And like I mentioned earlier, there's multiple versions of the score. Fortunately, in the mortgage industry, there's only one version for mortgage, but you have to make sure you're looking at a mortgage FICO score. Now this is the general formula that FICO uses for all of their scoring models. They mainly look at your payment history. That's 35% of your score. They're looking at how many times did you have a delinquency. They also look at how recent the delinquency. So if a delinquency just happened in the last 30, 60, 90 days, it's going to significantly drop your score. Where if the delinquency is 6 years old, it's not impacting your score even though it's showing on your credit. The next factor has to do with your credit card debt. They call that your debt ratio. And they look at your available limit versus the balance you carry. And so one maxed out credit card can actually drop your score by 40 points. So if any of your clients have like a $300 secured card and they go to Costco, everyone knows you spend $300 at Costco, so they just maxed out the credit card. And then if Jody were to pull credit, literally that would cause their score to drop by 40 points. So to have a perfect credit score, you want to try to use between 1 and 10% of your available limit. So a $1,000 credit card, you want to use between $100 and $10. Zero doesn't give you as high a score as a small balance. The third piece is the age or history of the accounts on your credit. So FICO looks at 3 areas here. They look at your newest account open. FICO will penalize you if you have an account less than 2 years old. So if your clients getting ready to buy a house, make sure they don't buy anything new and open any new accounts prior to the house closing. And then your second thing they look at is age of the longest account. So make sure they don't close their oldest credit card or oldest account. And then FICO does an average age for all the accounts. So newest account, oldest account, average age. FICO likes to see a variety of open accounts. So they want to see about 1 to 5 credit cards open. They like to see a car loan or a school loan. And they also want to see a mortgage. And then FICO also looks back 12 months. How many times has your credit been pulled? They call that a credit inquiry. Now, an inquiry impacts the score about 1 to 5 points. Now, the good news is if your client had another lender pre-approve them, and you want Jody to see if she can do a better job or get them pre-qualified, FICO builds in a 30-day window to rate shop. And so what that means is if a lender checks your credit today, which is the 16th, and Jody wants to check the credit in 3 weeks, she can pull the credit within 30 days, and her pulling credit will not have any impact on the score. So there's a 30-day window basically to have multiple lenders check credit, and that's for a car loan or for a home loan. That's how they build that. FICO said it's virtually impossible to predict score, but here's some estimates on a 30-day late if you have a 740 score. It's a 40 to 110 point drop. And so, like we mentioned earlier, your credit score is going to have a huge impact on your rates and your terms. So obviously, if somebody's dealing with a financial hardship, they want to do their very best not to go late on any of their accounts. Due to the pandemic, there has been a lot of special circumstances creditors are doing, like forbearance or deferred payments. So if you have a client who's dealing with a financial hardship, make sure they're calling their creditors, asking if they have any type of payment accommodations that they can make to prevent them from having late payments. Like I mentioned a minute ago, you want to try to keep your credit card balance between 1 and 10% of the available limit. If your client doesn't have funds to pay off all their credit cards, have them pay off the smallest cards first. That's going to give them the biggest bang for their buck on the credit score. And then if somebody has questions about specific things, we always offer free consultation. Have your client call our office. They can go to our website and register for a consultation there. But we'll review a credit report with them, and we're going to give them exactly step by step all the things they can do, so they have the highest score, so you guys can get them the best rate and find them the dream house. If they don't have funds to pay off credit cards, they can also ask for a limit increase. But you want to check with your lender first, because they will likely do a hard inquiry. And if that inquiry shows up, they may have to have an explanation on that. So just check with your lender. Ask Jody how that's going to impact it. But this is a way that can definitely help the score. Jody, do you want to talk about that?
Yes, actually, I do want to speak to that. You're correct. It will be a hard pull. And what we do pull what's called a gap report, and that is from basically the original time we pulled credit. We will right before closing we'll pull a gap report. Mostly it's a soft pull, but mostly to ensure that no new credit's been opened. There's been no foreclosure, bankruptcy judgment, things like that have reported since our original pull. But it does not affect the credit score or anything like that, because it's a soft pull. But we will see that pull, and we will have to have an updated letter of explanation if they obtain new credit. Even if it's a credit limit increase, then I'll have to have a statement showing that what the new increase is. So that is something he's right. Make sure you ask your lender before that happens. Thanks.
Thanks, Jody. So maybe this would be a strategy if your client's looking to get a house, 6 months down the road, and that might be a better option for them. So definitely talk to your lender about that scenario. Credit inquiries I mentioned a minute ago. There's three types. There's a soft inquiry. That's when I pull my own credit, or if a background check's done, or if a business that we're already doing business with pulls my credit, that doesn't show up anywhere. A promotional inquiry doesn't impact my score either. It's if a credit card company wants to check my credit and send me an offer. But a hard inquiry does impact the score up to 5 points for 12 months. But like I said, there's a 30-day window to rate shop for home loans and car loans on that. Third tip, this is something that someone could do if they don't have very much credit, or if their accounts are new, is if they have a spouse or significant other, they can be added on as an authorized user, and then the history from that account gets reported on my credit. So say my wife had an old credit card, she added me as an authorized user. About a month, 45 days later, that card's going to show up on my credit history, and I'm going to get all the payment history, the balance on that, and everything. Now, the only thing you want to be careful of, you don't want to add a credit card with a high balance on there, because it potentially could go against your debt ratio. So you just want to make sure that the card has a low balance and there's no negative information on that. Did you want to add anything to that, Jody? If so, feel free to hop on.
I'm good. No, I think you summed it up.
Okay, perfect. The next thing, and this is probably really for somebody that's either a first-time home buyer, right out of college, or somebody that just filed bankruptcy. I dealt with that this morning. I met with a gentleman that just filed bankruptcy, and since his bankruptcy, he has no new accounts open. And so your credit score would actually turn to zero after 6 months if you don't have an open account. So these hyperlinks in here don't come across very well. They look kind of yellowish, but we have hyperlinks for a secured credit card. It's guaranteed approval. You can also talk with Golden One. They have a fantastic credit card. We have an installment loan. If somebody needs to add an installment loan to build, it's like a minimum of $15 a month. It goes into a savings account and reports to all 3 bureaus. And then you can actually add rental history now to a credit report to 2 of the 3 credit bureaus. So you can get up to 2 years of rental history added to your credit. So those are some options. If your clients don't have any open accounts, they just file bankruptcy, they need to get some accounts open. Number five is pay for deletion. So a lot of your clients will think if they pay off a credit collection account that their credit score is just going to magically improve. Unfortunately, a collection hurts your score the exact same, whether it's paid or unpaid. And so you really, I hate to say it, need to consult an expert. So we can review a credit report with your client and give them advice. Our debt negotiators has established relationships with nearly every collection agency. And a lot of our collection agency relationships, the collector will agree to delete the account for payment. So if it's a medical collection or if it's a cell phone or something, we can call up our connection and they'll get a deletion letter, and then maybe your client should eventually give that to Jody to do a rapid rescore or do something much quicker. Next is settling credit cards. Credit card, remember maxed out credit card impacts the score to 40 points. So if your client has a credit card they've let go, and it's showing on the credit report is charged off, but it's still showing a balance there, settling that will help their credit score because it's like paying down credit card debt. Now you don't have to pay the full amount. I get that question a lot. Because the account's already been charged off, it's a delinquency. So you want to settle for as small a balance as possible. Generally they'll settle for 40 to 50 cents on the dollar. So and we have a script we can give you guys if your clients have issues with that, or it's a service we provide as well. Medical collections, like I mentioned earlier, we have a direct portal with TransUnion, so we can help with that. A lot of times we can get those removed within an hour or two. So those can be done really fast. They just need to have a small balance or paid off. We've had success removing multiple accounts with TransUnion instantly. So feel free to shoot your client over to us. We'll review the credit and we'll set clear expectations. If you guys ever want to join the call as your client, you're welcome to as well. Experian Boost, they're advertising like crazy. Actually seeing quite a few commercials lately. So Experian Boost is something the Experians come out where they're adding phone bills and utility bills to the credit report. Now it can potentially improve the Experian credit score for a car loan or for a credit card. But unfortunately, the credit score used in the mortgage industry does not recognize those accounts. So if your client's trying to improve their credit for a home loan, Experian Boost is not going to help. But if they're trying to improve their credit for a car loan or a credit card or something else, this is something for them to consider. Tip number 8 is feel free to have your clients contact us. We always offer a free credit review plan for everyone. We have an ebook that we've written that was actually a bestseller on Amazon under the credit repair section. You guys can get a free copy. Just text in your information to the 916-292-7962. Text in Blue Water Credit BWC to that number, and you'll get a copy of our ebook that you can share socially or share with your database. And then identity theft is something that you guys and your clients definitely need to be aware of. I hate to say it, it's on the rise. It's been growing exponentially now. So I'm not telling everyone to go out and get ID theft monitoring. However, I would recommend that your clients are looking at their credit report on a regular basis. So if they're looking at annualcreditreport.com, they can pull a free report there, or they can get Credit Karma, or if they want to pay for some identity theft protection, they can handle that. But they need to be looking at their credit on a regular basis, because I can't tell you how many people we talk to where they're like, I found my dream house, and then there's something on their credit they were not aware of. And then in terms of this is Mike. This is for you. For any of your clients that are doing any online marketing. This is some new information we just learned from Harvard Business on online leads. So they said if you guys want to convert online leads, you need to call them or text them within 5 minutes. And the best time to connect with people is between 4 and 5 p.m. So if you guys are setting up a power hour, 4 to 5 o'clock in the afternoon is the best time to reach someone over the phone. And then today is the best day to reach someone. So if you guys have anyone to reach out to, Thursday is the best day of the week to connect. And if you want to have the highest success in converting your referrals or online leads, you need to try to reach them at least 6 times. We found our best communication is in responses through text message. So if you guys are comfortable using text message to start, and then maybe survey your clients. Do they prefer a phone call, text, or email? And kind of take it from there. Kara, I have Kara Dukes on the call. I was going to introduce her. She's our relationship manager. She's our main point of contact for any new clients coming in. So Kara, do you mind kind of sharing how our process works and introducing yourself?
Sure, absolutely. Hi, everybody. Nice to meet you guys all over Zoom. I'm Karen. I'm our relationship manager here, and I can be your point of contact when referring your clients over to us. So we'll get them scheduled for a free consultation, and then be sure to keep you in the loop. So we'll let you know the outcome of the consultation, and if they do sign up with us, you'll have access to an online portal. So we'll get you the information for that, and then we keep you in the loop along the way. So. They'll each have their own dedicated case manager, and are there for any questions. We'll make sure that we keep you in the loop along the way, and then get them back to you when they're ready. So I will put my direct line and my email address in the chat. And then if you guys want to send me an email, I can send you over some information. I can include a simple email template that works well for an introduction if you'd like to use it. Feel free to change, add as you like. And like I say, I'll be sure I'll keep you in the loop.
Awesome. Thank you, Kara. All right. So does anyone have any questions? I saved a few minutes for some Q&A. I can. And this is the number, you guys. If you want to get a copy of today's presentation, you're going to text BWC to the 916-292-7962. It'll be an auto response. It'll have a copy of today's presentation. It'll also have a copy of that ebook that I mentioned, and then some of the tips for building credit. Mike, did you want to moderate the questions, or I could try?
We have a lot of them in the chat.
All right.
If you want, I could read them off.
Yeah, let me stop sharing my screen, and then I'll get the chat up.
Yeah, that makes it easier sometimes.
Okay.
Can you find the chat?
Yep. I'm looking now. I see Kara responded. Someone wants our phone number for credit repair. Maybe you can help.
Sure. All right. So Kelly had questions that's something else. Somebody asked for the phone number, which Kara has replied to. Okay, let me start at the top. We have Jody's information and links, your information, more Jody's information. Is this data, this is for Jody, referring to the USA or local? That was, I guess, about when you were talking about the market, or I don't know, whatever you were talking about.
It's an average across the whole country.
Do you offer CalHFA?
Actually, Fannie Mae doesn't allow any down payment assistance programs, and FHA.
No,
I don't know. They do. We don't have any of that.
Yeah, CalHFA. Yeah.
I'm sorry. No, we don't do any of the down payment assistance.
And by the way, I have in the past talked to a different credit union. This is before I met Jody. Don't get an attitude. And that was doing CalHFA, and we were actually going around doing seminars on it, and we could never get anyone ever to be approved because they have income limits and things like that.
You have to make a certain amount of money to qualify for the loan, and then 99% of the time it's more than what the income limit is.
That's why it never ever happened. But I don't know. GSFA. I'm not sure what a GSFA. I know what a government-sponsored Ferengi Alliance. I don't know. Anyhow, we don't do down payment assistance programs. What is the maximum loan amount that Golden One can go up to?
We don't have a stated maximum loan amount.
So bring it on. All right, let's see what you got. All right. I ask you to send a link to the presentation. I'm sure we did that again. The links are in the chat near the top, but people sometimes can't see them. Please check email for your contact information. That's Kelly. What is the charge for credit repair? What is the charge for credit repair?
Great question. So the initial consultation is always risk-free, and then our fees are based on how much work we do. I'd say on average, our clients are spending between $150 to $200 a month maximum with us. And our program is on a month-to-month basis for up to 6 months. There's no contractual obligation for them to stay with us. We kind of like to work with the lender to find out what the sweet spot is for the credit score, and then we reach out to the lender and the agent usually about every 45 to 60 days and see if it makes sense to pull credit then. And then obviously we turn them back to the loan officer and the realtor once the credit's eligible or in the sweet spot. And then you guys just have to find them a home. It's that easy.
Yeah, that's the easy part.
That's the easy part.
Jeff and Jody, can you help in Honolulu?
I can. Yes.
Yep, we sure can. I would be happy to travel there anytime.
You beat me to it.
I'm sorry. I don't know where my brain was. I apologize. I am only licensed in California. I apologize about that. I don't know why in the world I said yes. Maybe because I want to go there. But no, I'm only in California.
Jody and I are both just licensed in California, but both of us would be willing to go and help if that was.
Moral support. Sure.
And for me, immoral support. If this will be recorded and for a small fee, you could watch it later. How can we get it by email? We've pasted in the links a few times. This will be uploaded to my YouTube channel. Yesterday's things will be on my YouTube channel. Thank you. Can I get a phone number for credit repair? We put that in. It's a sweet spot for low income qualifying. I don't know if that's a question or a reference. So I don't know. Awesome. Thanks. Here's the program. What is your percentage in increasing credit scores?
Okay, so part of credit repair, we can never guarantee a specific outcome. It's actually illegal to guarantee something. So we do have a satisfaction guarantee. So for whatever reason, if the client's not satisfied, we'll issue a full refund. And then we can speak in averages. Generally speaking, on average, our clients are seeing about a 15-point increase in their score per month. So if somebody comes to you with a 580 credit score and Jody needs them to be a 620, we're looking at probably around 2 or 3 months. We're going to recommend Jody pulling credit again, and then obviously scores are above that threshold, and then we turn them over to you guys. So we work only on referral, and so if we don't perform or give good service, we stop getting referred. So obviously we try to set clear expectations. We try to have good communication with you and the clients, and then we only take on clients we feel would benefit because we do offer a satisfaction guarantee, and so we don't want to do the work and refund them. So, but yeah.
Okay. There's no guarantees. I think we reached the end of the chatted questions. So if anybody is, willing to want to speak, give everybody a moment to shout out there. I'm not here. Thank you very much. Very informative. All right. Well, we appreciate that. It looks like we've exhausted their curiosity as it relates to these subjects.
Awesome. Well, Mike, thank you. Jody, thank you. And maybe I'll end with this. As we celebrate record numbers, our goal is to remember that every number represents a person. Every person has a story, and we believe everyone was created on purpose for a purpose. Working in the real estate industry is not easy. It's hard work. But when we serve others, it gives our life great purpose. So thank you guys for your time, and I'm grateful for the chance to help.
Great editing. I'm going to steal it next time. All right. Thank you, everybody. Stay safe out there.
Thank
Thank you, Jody. Thank you, Chris.
Mahalo.
Jeff.